Hey everybody, Scott DiGregorio here, your mortgage guy, coming back on the series Qualified, Great, Don't Go Shopping Without Knowing These 10 Things. This time I want to talk about interest rates. What the heck determines interest rates? And look, if there's a topic most misunderstood, it's this one in my world. And everybody watches the Federal Reserve and, hey, the government's raising rates and what's that going to do to my mortgage rate? And nothing is the answer. Look, without getting too technical here, okay? Mortgages are bundled up and sold on Wall Street in the type of a bond called a mortgage-backed security, okay? An MBS bond. And what determines interest rates are the buying and selling activities of MBS bonds. And when more people are buying them, rates go down. When not a lot of people are buying them, rates go up. Third grade economics, supply and demand. So begs the question, well, why the heck would people buy them or not buy them? So check it out, okay? And please understand, I'm giving you an incredibly simplified answer here because we could really get too deep in the weeds. By the way, if you're one of those deep in the weeds people, reach out to me and I'll go there with you. But for the sake of keeping this video simple and short, here's the thing. MBS bonds typically are very safe investments. They generally have a pretty low rate of return. So if you're feeling fearful of the economy and fearful of the stock market, money will flow out of stocks into bonds, rates will go down. If people are feeling good about the economy and good about the stock market, money's going to flow out of bonds into stocks and rates are going to go up. So very, very often, the stock market and interest rates mimic each other. Now, there's global pressures and a million other things that will sometimes throw off that balance. But generally speaking, that's how it works. So if the economy's not doing well, if bad things are happening, if fear is rising, whatever, generally speaking, that's going to push down interest rates. Recessions are wonderful for interest rates. Times of economic boom are not. Please also understand, by the way, if interest rates are going up, so are your rates of return on savings accounts and CDs and other things, which if you're maybe retired and whatnot, that is a very good thing. So we got to take the pros and the cons with everything in life. But that's what controls interest rates. Unfortunately, tracking the mortgage-backed security bond market is near impossible. That information is not available to the public. I have that information texted to me on an hourly basis because I need to know what's up. The closest thing you could watch is the 10-year Treasury. The 10-year Treasury very, very often mimics interest rates. So that's what controls interest rate. That's how they're determined. Make sure you work with the loan officer who understands that. If they don't understand what's going on with the rates, you need a new loan officer. I happen to know somebody. I'm Scott DiGregorio, your mortgage guy. I'll see you on the next one, guys. Take care.